As I'm watching some of the data come in and I hear from all of these investors, they're concerned about reaccelerating inflation later in the year as some of these comps change. Are you also starting to worry about that a little bit more?
Well, we've already had a lot to worry about in today's conversation, so I won't focus on all of the worries I have.
We've got more.
I saw the shipping conversation earlier today.
Lisa specializes in worry, Tom.
Yeah, no, there's a lot to worry about.
Yeah.
I mean, I think you have to acknowledge how good the inflation data has been for the last 7 months. I mean, the last 7 months, core inflation 1.9%. That's right on target. That's terrific, right? And I'm not rooting against inflation, but I'm always, trust but verify. Let's make sure that's really right. And so we'll get a few more months. It would be, I would very much like to see that trend continue and, broaden, because it's been disproportionately goods deflation that's been masking higher than normal prices in rents and shelter. So I'd love to see it broaden, and maybe it will. The trend is good, and you can't argue with that trend. Let's just see how we go.
How do you parse inflation these days, though? Because, yes, the PCE is down below 3%, but when you look at things like the Cleveland and Dallas trimmed means, the Atlanta Fed sticky wage index, it all shows basically more inflation than your targeted index.
Well, these numbers will converge over time, right? And so what's happening right now in inflation, as I said, is you've got a lot of clawback of goods price increases that happened during COVID. And so goods deflation, which has always been a factor, is even more significant than it has been over the last 20 years. Rents and services are higher. These trim mean measures look at the center of the distribution. And so they're looking at that center part, which is higher, as opposed to the weighted average, which is lower. If it broadens, everything will come down. If it doesn't, it won't, and we'll just see what happens.
Well, how do you make a judgment then on when you think it'll be appropriate to cut? What are you looking for? The phrase I think the chairman and others have used is measurable progress toward the 2% target. How would you define that?
If I could get these kind of numbers sustained and even better broadened, that's what I'm looking for, sustained and broadening.